All right, 3-2. The notes here. We're going to be paying some taxes and getting a lot of this from our payroll register. Some of them we give them to you in directions, and we're going to call some new account titles. They don't do a great job of talking about it, but we want to, if you watch the problems, we'll do a good job trying to explain that. But how we want to get started, we first want to talk about the bank account. All right, we have a special bank account that is only for payroll. Okay, a special payroll checking account, and checks are used. We want to put all that money that we need to pay out into one account, and then we'll write all the checks. And if the account is reduced to zero, should be reduced to zero as long as all employees have cashed their checks. So we'll take a check from our general account and pay it to the payroll to pay the net pay. We'll pay all the other checks from that. So we have a general account, payroll account. We'll take a check out of the general account, write it to the payroll account to cover all the total net pay. When we pay everybody, it should go back to zero. There's some checks and balances. That way people aren't getting paid more, or there's some embezzling or anything going on. Excuse me. With that. Automatic check deposit. We have an automatic check deposit, EFT transfers, electronic fund transfers. This just means your check is paid directly into your account, whether it be a checking or saving. You authorize. You probably got to sign a paper and put your bank number in there, and everything will go in electronically. When you do electronic funds transfer, it eliminates the need for writing the payroll checks. It'll just go by computer. You'll also pay some bills electronically. And so when you do that, you won't write a check. You'll have memos telling you do that. So first, we're going to journalize the payment of payroll, okay? And so when we're doing and paying payroll, you're going to have all the different pay going through. And if you remember the payroll register, we had grills, furniture, and administrative. What we had and what was said there, it was like total earnings. You know how we had the total earnings section? Well, that's going to be called salary expense. So we'll take the total earnings from our payroll register for each department, and we will debit those to salary expense. So salary expense, total earnings, same thing. That's when we figured out hourly wage, overtime, commissions, and then we got total expense, total earnings. That's what this is now called, salary expense, when we pay in the journal. We have all these different taxes: employee income tax payable federal, employee income tax payable state. The federal employee income tax is when you look up the married, single charts with the allowances. So that's what's going to be called employee income tax federal. When we took a certain percentage, 2% of our total earnings to pay employee income tax state, we would have said state income tax. Now we're calling it employee income tax payable state. So these are new names to things that are actually in the journal. Total expenses, grills, or total earnings for grills, furniture, administration, salary expense. Federal income tax is called employee income tax payable. State income tax is employee income tax state. These payables recorded here. Social Security, Medicare, it's no problems. Makes sense, comes from the payroll register. Medical insurance payable, retirement time plan payable. Those two come from the deductions from Medicare, or the medical insurance and the bonds or retirements, whatever they list them as in your register. So this stuff's all coming from our register. And you get the general. Wiley's payroll register contains the information shown to do this cash payments journal. They have everything kind of set up in different ways. Here's all the taxes. So they have multiple T accounts to give you that. What you end up with then is the difference between debits and credits is the cash credit. These are like the deductions. Subtract those from the debit. Whatever's remaining is going to be the check that net pay would be. Again, that would be something you would see, as it says, net pay in your payroll register. So it's not like you have to do a lot of math for that one. You just got to kind of use your payroll register. This is what the transaction will say for another transaction that we got to do, or this first transaction that we do, where it says paid cash for biweekly expenses. They give you the numbers here. We often will have to find them in the payroll register. They won't tell you employee income tax, federal, or employee income tax state. They will say federal income tax, and you'll have to put employee income tax payable, federal employee income tax payable. Okay, so that's the first transaction. And we'll show you when you watch the work together. These are the taxes, separate payroll tax that we need to pay: employer, Social Security, Medicare, unemployment, state, and federal. We'll fill this chart out. This will be one of the first things we do in work together. Each department has its deductions taken out. We want to know how much money each department has, like we did last time with total earnings and the salary expenses. We also want each department's deductions. So it talks about how employers must pay the government taxes. They have to pay several of their own, which you listed there. When we get to these types of taxes, employer payroll taxes sometimes are based on a percentage, Medicare, Social Security. We talked about these last time. Excuse me. Social Security tax rate is 6.2% of your earnings up to the tax base of $128,400. I didn't highlight this because this is all from last chapter, but it's a good reinforcement about what happens. Medicare is 0.0145. 1.45% is 0.0145. The federal unemployment tax. We're going to tax the first $7,000 earned by each employee. Once you make $7,001, that $1 is no longer taxed unemployment-wise. There's up to 6% for federal unemployment tax. They give you a deduction of taxable earning. 5.4 will go to the state. So what we're going to do up to it, we're just going to pay that. Every state, they say in a lot of these, this line is often used. Tax state rates and bases vary by state to state. But for our purposes, and this hasn't changed in many years, we'll take 5.4% of all the earnings for each employee up to $7,000 earned will be deductible for state unemployment tax. The remaining amount, if we had 6 total minus 5.4, the federal amount will be 0.06% of total earnings for that employee up to $7,000. And that's what they're talking about. Most of these employees have already exceeded this. Being we're in the second quarter, it said Wiley hired 2 employees during the second quarter. Neither have accumulated earnings exceeding $7,000. So we'll have a couple people paying, but not everybody. Wiley reports earnings by department, which also wants to know why the expenses for each department, how much the expenses cost to help us make that revenue. So it's important that we pay taxes by department, report it by department as well. This is an example of the grills department. Excuse me. Here's the grills department. It's just writing all these numbers down. What you got going here as far as what department the grill has. Okay. All those percentages are based off of the first 2 are based off of total earnings. The unemployment is based off the total that they tell you about how many employers or employees or salary is taxed by the FUTA earnings. The federal unemployment taxable earnings isn't everybody. And this department is only going to be worth $1,275 this quarter. So we take it by the 0.6% for federal and the 5.45 for state. Employer taxes are seen as liabilities until they're paid. Here we're recording them in the general journal. So we have to make these transactions where we do payroll tax for each department. And these figures we figured out in the table. So if you kind of remember up here, these figures we had in the table total payroll taxes. You go back here, and now you got these numbers. All right, and then you figure these out from the tables as well. When you look, Social Security tax total 760. Okay, and you come over here 760. So you got these numbers from that table. We're taxing payroll tax expense for all the deductions for each department. We're also taxing the total for Social Security, Medicare, unemployment, state, and federal. So again, we're up here. Here's the unemployment, state, federal. These numbers for the debits here for the Social Security and Medicare. And what these should do is the debits should equal the credits on that. Record these payroll taxes. Sometimes they'll give them to you too. But this might be something where you take a little bit better look at it. So down here, I mean, that's just the T accounts, excuse me. Down here is where I know they gave you those. I didn't want to gloss over that. They gave you these numbers, but they're in the table too. If that's the ones over there. Okay. Payment of federal income tax, Social Security, Medicare tax. These numbers are usually given to you in our instructions. At least they are, and they work together in here. They give us these numbers. We take them. We put them down. The debits, you have to equal the cash credit. Often we're doing the memo for this one. So memorandum 76, even though it's a cash, excuse me, cash credit. The more money you make, the more payroll taxes you have, the more often you have to pay it. Business that may deposit more than 50,000 calendar years classified as semi-weekly. Payroll tax of 100,000 or more means is accumulated on any day. Then we have to pay them the next day. For our company, we're a monthly scheduler. The amount of money we make means we only have to pay a monthly, the 15th day of the next month. Collect all the tax in April, and you pay them on the 15th of May, the next month. Again, total amount tax paid determines by the frequency and method of payment by employer payroll. Again, if you want to learn some more about this stuff, you can read it. But the memo, electronic funds transfer for the federal tax payment. Electronic federal tax payment system allows payment to print out a receipt. When I pay taxes or if we get refunds, we just get it automatically taken out as persons or getting paid, put in with the refund. So this is just allowing them to pay their taxes with a memo. You know, like, wait a minute, cash credit, like we said, but it's a memo. And that should be it. Take a look at the 2-1 problem, or 3-2 problem. Work together is there to help you. We walk through it pretty good.